Hello, welcome to the Advisory Services is Gold webinar. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I hope you're having a wonderful day. Delivery of advisory services is gold. It's gold for your SME clients because they need additional financial commercial advisory services delivered by accountants. I think this is the new great challenge for the accountancy industry, to supply the services that SMEs need if they are going to survive. And look at the situation we got at present: high interest rates, high inflation, increased business failures, and a lot of business uncertainty, isn't there? So the key financial commercial services that at ESS BizTools we have developed product packages for start with the 52-week business enhancement system. This is important. There's no reason why a smaller business should not be very similar to a larger business that is now employing a full-time accountant. And the full-time accountant will do a lot more work than just work on profit and loss accounts, monthly accounts, balance sheets. They'll be involved in a whole range of analysis of key performance indicators and determining what if type questions from the CEO or the owner of the business. I know I was the chief financial officer in a listed public company. And every day, even when the CEO was overseas somewhere, I seemed to get a string of requests. Can you have a look at this? Can you get your costing team to have a look at this? What would it cost if we change this? And so on. Who do your clients go to when they got those questions? They're what if questions. Because most of your clients haven't got a full-time accountant. They got you. But at this stage, they might only see you a few times a year because you're primarily responsible for income tax or very small amounts of advisory services. I think it's time for a quantum shift for accountants to say, we are primarily in business to help our clients survive. And a byproduct of all that will be the taxation return for lodgement with the Australian government. I think the priority should be, let's get the businesses functioning properly first, rather than worrying about the tax return. So the 52-week business enhancement system starts with a due diligence review of the business, identifying internal controls issues, identifying who does what, who looks after the purchasing, what's the process, who checks the stock in when it's purchased, who makes the sales, what's the process, what's the follow-up documentation. And in most cases, I think you'll end up knowing a lot more about your client's business than what you might know at present if you're only concentrating on preparing annual accounts and tax returns, because you don't need to know as much. In fact, I come across accountants when I am consulting to them or to a client that the client has told me, oh, the accountant's never been here. You're the first accountant that's ever been into this workshop. I find that rather strange. I like going into workshops and boning rooms, if it's the meat industry, and shops, and just seeing what goes on. Because invariably I used to come back with a fair bit of work out of going to those premises. My team used to whinge a bit at times, especially when I come back on a Friday afternoon and said, I promised this by Monday at 9 o'clock because there's something urgent. And they hadn't realized that we could help them. I think that's one of the big problems. The accountancy profession has not continued to promote to SMEs that accountants can assist them. But we've got to wear that badge ourselves. We've all got to talk to them so that they can understand. So then once the due diligence review is finished, and that's a job that should be reviewed each year, I think. Do another sweep through it, make sure there's been no changes, make sure someone hasn't gone to sleep on the job. Because if you're offering a virtual CFO service, you've got a lot of responsibility for this business now. You've got to make sure the internal systems are working, just as you would if you were the employed CFO. And then the next big matter is business planning. I think business plannings are vital. They're like maps for tourists. If you don't know where you're going, how are you going to know when you get there? You might just sail through the road junction or whatever. So we need to develop business plans. We're not just you going off and writing a business plan and bringing it back and saying, here it is. That's not the way business plans should work. And it's not copying someone else's, and it's not getting it out of a textbook or off a computer screen that you can just download. I think you need to sit down with the leadership team. Use the questions that we've got within ESS BizTools. We've got about 35 different sets of questions to help you prepare business plans. Go through it. And make sure that in the business planning process, there's action plans, probably set in 3-month installments. And make sure there's a meeting each month of the management team, pardon me, and that follow-up reports are submitted. This is where we got to. Because the business plan must be a living document. It can't be something that's just picked up, a bit of paper and thrown into a filing cabinet, probably never to see the light of day again. That's not what we're looking for. We want a business plan that can be the guiding document, the key to supply the information that is needed for the business. And then we flow into the predictive accounting reports. These are the budgets, the key drivers, and the key drivers are very important activities. They're the inventory for raw materials. They're the stock for completed stock. It's debtors, it's creditors, research and development. It could be export market development expenditure. It could be a major innovative project, capital expenditure. The reason we have them highlighted in separate sub-accounts in the whole budgetary cash flow forecast process is to make sure they're not hidden away somewhere, because we need the leadership team to be aware of them and know what has been budgeted, because each month you will be updating that in the monthly financial reports so that they can see what the actual cost of these items has been. So the predictive accounting reports then go into the cash flow forecast. And the big decision that you can make then is looking at the future projections. What's the balance forecast 2, 3, 4 months in advance? That's the crucial questions. And is there something happening that in left field a bit that might affect the cash flow position of the business? Now, that could be problems in getting supplies from overseas at present because of these 2 very unfortunate wars that are causing shipping to be rerouted around the bottom of South Africa, adding 2 or 3 weeks to a journey. So therefore, goods turning up in Australia are late. Does that mean that your client needs to try to get additional stock? So they're going to increase their investment in inventory. So instead of being a couple of $100,000, it might have to go up to $500,000. That's an extra $300,000. Where's that cash flow coming from? And does that mean that some consideration should be given to where the funds are coming from, raising the funds as loan funds? That's the simplest, pardon me, but does the business have borrowing capacity? Has it got security it can offer a lender? Or is it a fairly well-established company that's got a clear vision, got a business plan, got predictive accounting reports, good leadership team, a board of advice, and consideration might be given to say, well, Let's try and go out and raise some capital. You know that over $430 million has been raised in Australia over the last 6 or 7 years from crowdsourced funding, equity raising. I've done a fair bit of work in that area with people, with the crowdsourced funding intermediaries, or some of them. And I think there's a lot more opportunities for work. One of the intermediaries published a report last year which indicated that they only supported about 3% of the people who made contact with them. 3%. What was wrong? At times, I hope those people hadn't gone to see an accountant, but this is logical work for us to be undertaking for our clients. I'm assuming they hadn't gone to their accountant, or they didn't have an accountant, or for some reason they didn't want to involve their accountant. My suggestion is you continually market to your clientele, the SME businesses, that you can assist them on crowdsourced funding, equity raising. Because in ESS BizTools, if you agree to become a subscriber, we've got a full package, checklist after checklist for every conceivable thing to do with crowdsourced funding, equity raising, and early stage innovation companies, so that you could guide your client on this process. You're not going to raise the capital. The capital is ultimately raised by the government-appointed crowdsourced funding intermediary. But your clients need business plans, predictive accounting reports, and a crowdsourced funding offer document. They need a vision. They need a leadership team that understands how this process works, that has a good understanding of corporate governance, so that they can hold their heads high around a board table so they understand the process. And then we come into the more day-to-day activities, a daily report. When I first started working a long time ago, there were daily reports every day. I only had one page of basic information: bank balance, income yesterday, outgoings yesterday, major payments to be made this week. In other words, saying, I hope someone's thought about where that money's going to come from. You don't need computers to do that. It's just a process report. So the one that goes around with your clients might include a gross profit percentage, average sale price, labour to turnover, if you can work that out daily, probably not, but you know gross profit percentage, average sale. And if you're running a meatworks type business, what was the yield? And that would also apply in a lot of other businesses that are processing a product that starts off 100% and only ends up at 70 or 65% of the original. The key, of course, is to make sure you get as much as you can that's edible or usable product. So daily reports are very important. But one of the biggest ideas that we have is the weekly performance and profitability estimates. Now, the big end of town prepares these documents all the time. My observation on the big end of town that I did work with is that the attempt is to set up a series of small businesses and put an area manager in control and give that area manager an accountant, a few other clerical people, and that area manager might look after a number of activities. In our case, he looked after an export meatworks and about 20 retail shops, a small goods factory, a couple of freezer stores, and few other things, a hide store, that's the other one I was thinking of. So he had those other business units. And each week he got a profitability report, which he was then able to sit down and talk to the manager running those individual businesses, whether it was the meatworks or individual retail shops. Now you can go and look at and talk to someone in Woolworths, if you know the manager of the store, and find that Woolworths do something very similar each week. They know their results. Monday, Tuesday for each department. IGA do it. I've done some work for some of the IGA franchises, and they know their departmental reports. 42 departments the IGA store that I was working on had. knew their results, sales, gross profit percentage, or labor to turnover, average sale, what was the percentage variance from last week to this week, what was the percentage variance to the budget, all sorts of information. That's what we can produce for our clients to help them run better businesses. And the IGA network around Australia, I think, has done a remarkable job. They had a few false starts 15, 20 years ago, but they're really kicking on. They are good competitors, and some of them are very large businesses. But they are using the accounting systems and the technology. You've got all that at your fingertips also. Just that you won't be doing it full time, because you're only doing it with one client at a time. They've only got one business. I think we need to improve this information, this analysis of data, so we can help our clients survive and grow in this hostile environment we're now in. Ability to take action if performance below expectation. I've got that now there to remind me to talk about it, because the reason you're getting weekly performance and profitability estimates is to highlight very quickly if what you thought was going to happen hasn't happened. If you thought the gross profit percentage was going to be 36% and it turns out at 23%, you've got a problem. What happened? Why did that happen? There's a number of answers. Someone forgot to put the new price list into the cash registers. Someone missed some sales invoices that didn't go through. The stock take at the end of the week was incorrect, or it wasn't valued correctly. But there could have been fraud. There could have been other things. The real reason for preparing weeklies is to fix whatever the problem is there and then. Not let it drag on for months. Not let it drag on to the end of the financial year, and then 4 months later, the client fronts up to see you and you say, oh, your gross profits dropped a bit this year. Too late to go back and repair that damage then. And then we should have monthly financial accounts for all business operations. The monthly profit and loss, and then a comparison to budget, so that we can see where the variances were. Key performance indicators and business metrics reports should go to the leadership team. What I found in a public company environment is that the KPIs and the business metrics were the most sought after document after they checked the bottom line. I found that the managers didn't really sit and study line by line in the profit and loss account the way we might as accountants, but they did study key performance indicators or the business metrics, because that meant something to them. They knew what gross profit percentage meant. They knew what the boning room yield meant. Because if it dropped, it meant too much good meat was being left on the bones in the meat industry. So you had to get people to take more off the bones so that that meat was able to be sold. It might have only been mincemeat, but it was sold. And the monthly financial report to the leadership team, that just rounds off the month. And then we start again for the next month. Daily, weekly, monthly. Daily, weekly, monthly. That is the 52-week business enhancement system. So let's now look at some of the allied services, because I see the 52-week, as I've just described it, being the vital service for you to supply. And then we've got some others. Chief Financial Officer Services. That's looking at everything that's going on in the business. It's reporting to the CEO or the owner, keeping them aware of things, keeping a very close eye on the cash flow position, keeping a good eye on what's going on in stock and debtors and work in progress, capital expenditure, and what's the impact going to be in the cash flow position in 3 or 4 months' time. And do we need to do something? Do we need to be ready? Because if you decide, okay, we're going to go and raise $1 million from crowdsourced funding, there's a process. It's going to take you, I think, at least 3 months to bring that off, and probably 4 to 6 months by the time you go through the process, especially if you've never made contact with a crowdsourced funding intermediary. They want to know all about your business. They want to check what's going on with social media presence. They want to understand what's going on with your website. They want to know if people in the community that may be customers or potential customers or just general people that know something about the business do know something about the business, because they could be potential investors. The debtor systems review. Debtor seems to be a major problem with Australian businesses. A few years ago, Australia got awarded a very dubious international award of having the longest debtors days outstanding in the world. Nothing to be proud about. And whilst the Morrison government and then the Albanese government moved to make sure that government departments paid their bills owing to SMEs quicker, and now the Albanese government has brought in shame type legislation that the big end of town, their turnover's over $100 million, that if they're slow in making payment, they could be named in a government report. I really don't know how effective that's going to be, but politicians think it will be. So the debtors system is something that needs to be closely looked at. What's the system? Is there a credit application form that the new customer has to sign? Does the customer get a new customer letter? Welcome. And does that letter alert the sales department to chase up that new customer and give them their own welcome to the business? Does that communication with the customer identify if the customer requires special information to be supplied with a tax invoice? For argument's sake, the customer may require a bill of lading to be always attached if they're paying for products being moved around. Or it could be health certificates. It could be something. Or they could be saying that we must receive all the invoices and all of the documentation by the 8th day of the month, otherwise it won't get paid into the following month. Whatever those conditions are, need to be implemented. And in our system, we've got a detailed debtors manual that you can customize to suit your own client, badge it with their name, obviously. But if they're calling the cash payments book the red book, we'll call it the red book. If something else is the green book, we'll call it the green book, or whatever, to make the person who's responsible for debtors management a lot more comfortable in performing his or her duties. Cash flow. Understanding cash flow is very important. We've talked about a couple of the issues already. Build up of inventory because of wars in Europe. Build up of inventory because of Christmas. When's the payments got to be made? What's the effect of all this on cash flow? Now, some businesses at this time of the year have entered into arrangements with overseas suppliers, especially in the jewelry industry, and to build up their stocks long before now in December, but start building up their stocks in October, November. And they've negotiated payment terms and not having to pay for that stock until March, April the following year. That can be done, but has it been done? It's a bit late to start thinking about that in the second week of December, if that's what's going on. So cash flow management is important. And I believe that if you're offering this service, you're the one that's got to be sitting, thinking about it and making sure you're informing your client about it. And let's look at funds management. We've talked about a couple of these items already. But capital raising. I believe that accountants in offering services to SME clients need to be very familiar with all ways of raising capital by your clients, because it's a very important service for them. I'd like to think that the $400 million that's been raised over about 7 years for crowdsourced funding, equity raising, in fact, become an annual type raising figure. Now, that will only happen, in my opinion, if accountants around Australia become far more mindful of what is happening and openly talking about crowdsourced funding, talking to your clients about it, discussing what happens when shares are issued in a company. There's a whole range of issues you can do. And if you're a subscriber to ESS BizTools, you'll have all that material at your fingertips. So I've got there using Section 708 of the Corporations Act. That was the first way we could raise capital for a private company. It's served us well over the years, but it's got some restrictions. You basically can only deal with family and very close friends or people you're working with. You can't market it or advertise it. Then we've got early stage innovation company. This is the only way that I know of in Australia that an investor investing in a small company can get a bonus from the government, get an incentive. They get 20% of their investment paid back to them as a deduction of their taxation bill. And if they haven't got a taxation bill, then it just carries forward until they do have a taxation bill. And it comes off 20% of their investment. And if they hold those shares that they've been issued for the early stage innovation company process, they don't pay, they hold those shares for longer than 12 months and less than 10 years, they don't pay any capital gains tax when they sell those shares. That can be quite a big saving. And if they still own the shares after 10 years, they can revalue their shares, get a new cost price, future capital gains tax calculations. Are your clients familiar with this process? And some of your clients could be potential investors, especially the ones that have got reasonable superannuation funds, self-managed. They might be looking for some investments. Crowdsourced funding, equity raising. Turnovers under $25 million, gross value of assets under $25 million. You need 2 directors at least. Can't be registered on a stock exchange anywhere in the world. We have to work through the crowdsourced funding intermediaries, but you can work with them. The intermediaries aren't going to do any of the work relating to the business plan, the budgets, the cash flows, making sure that your client's team understands how it all works, preparing the crowdsourced funding offer document. The intermediaries don't do any of that. They check it all. But I suggest that you and the client's team have got to prepare those documents. There's a lot of work, and it could be quite valuable. And then we got venture capital, because there's a very big venture capital market in Australia. We shouldn't forget it. And we're writing new material to go into our system on venture capital. That's why I've included it here. We basically mentioned it, but we're putting a lot more material in. There's some very important allied services. Charge out rate calculators to achieve targeted profits. This is important. Tradies, professional service firms are charging for labour. So you need to make sure you've got all your labour on costs. You know what you're paying the various team members, how many hours they're working. There needs to be a determination of what their profitability percentage will be. Sorry, what their capacity will be for working hours. What the productivity will be. I said profitability, I'm sorry. What the productivity will be, 70%, 75%, 80%, whatever it happens to be. And then we've got retailers who are looking at their stock mix and pricing markups to achieve profits. So there's services that we've got in our system that will help you deliver that. Research and development. This is a great area. But I'm afraid that many accountants seem to want to avoid it. One guy said to me one day, Petey, I'm not a scientist and I'm not an engineer. I said, well, what do you tell me that for? He said, well, you're asking me to help clients with research and development. I think I need to be one of those. I said, I don't. I've been advising clients for years on research and development. I'm not one of those, I can assure you. I think the accountant's role is more akin to an internal auditor when it comes to research and development. Your client is primarily responsible for conducting the research, for checking prior art, for talking to universities, for talking to patent attorneys and finding out what other people have done, if they have done. We've developed a whole series of forms to cover all the details required in the research and development legislation so that your client can document it. Your role, as I see it, is to check that they've done that, go through and click it, and then lodge the return of research and development activities, which goes to Oz Industry, prior to the 30th of April the following year, but preferably a little bit earlier than that, a lot earlier than that, because they get inundated with material around the end of April. Because under that sorted out, the client's tax return can't be lodged because you're waiting for Oz Industry to issue a registration number that they send back to the accountant, tax agent, that you then include in the taxation return of your client company to claim the research and development tax rebate. But R&D can lead to great other activities. It's part of the innovation journey. And there's some other things that are all included within the ESS BIZTOOLS package. Succession planning, huge problem for businesses all over Australia. Corporate governance advice. If you've got a client that's thinking about trying to raise crowdsource funding company status, I think they should be sitting down with you and working through our corporate governance manual. So they've got a better understanding of this whole world of directors' duties and responsibilities. Because they may have on their some other people on their board of directors once they raise crowdsource funding. The investors may insist on it. The intermediary may have said right from the outset, well, you're going to have to appoint another 2 directors if you're going to go to the market and raise $2 million. And if your client says, no, we're not prepared to do that, you'll probably get turned down by the intermediary. The corporate governance knowledge is very important. Buying a business. We've got a full manual on buying a business. The Export Market Development Grant. Currently, it's open. Opened on the 12th of November. It will only be open for as long as it takes for Austrade to allocate the amount of money that the government's given them to spend on export market development grants. So if you've got any clients that are thinking about it, better tell them to hurry up and get their application into the pipeline. The Business Growth Grant evaluation and submission of applications. This is the current government's big new program to replace accelerating commercialisation. So it's got 2 components. The first one is really going beyond the basic research and development to get a demonstrable product in a prototype format. And that's funding of up to $250,000 on a 50-50 basis. So that means, of course, with the client putting their money in, there'd be $500,000 worth of work to be done. And then there's the commercialization factor, where there's grants of up to $5 million that the company's got to match. It's a lot of money for a company with a turnover under $20 million, because that's the limit. So the Business Growth Grant can be a great opportunity for your client that's wanting to be involved in innovative activities. Risk management, personal property securities register. There was a report prepared on the personal property securities register about a year after it was first introduced. And the judge that undertook the review, I understand, said that I'm making 343 recommendations. So the legislation did get off to a bad start because a lot of it was not thought out properly. And a lot of businesses got caught. You don't hear many stories at present, but we need to be mindful that some businesses will suffer by ignorance of that register and therefore maybe not have registered on that register. So we need to know about it. So in the ESS BizTools system, there's a full product package on selling a business, guidelines for how you can help clients sell a business, strategic business mentoring, the executive director role. As your client grows, you might get more and more involved with the client, the business, and you basically become an executive director. Someone rang me about that a few years ago and said, what do I do as an executive director? I said, I'll write you a note. He said, I'll put it into your system. So we did. That's there. Succession planning. Very important. Not just for the CEO, but for everyone, because it can be, succession could be developed as a team training program to get people involved. Now, all this, I think, is gold for your team. What we went through at first was the gold for your clients. They're getting all this service. But let's look at the gold for your team. They will be undertaking interesting and challenging work if they're working on those projects we just went through. It will give them an introduction to advisory work, especially in this financial commercial advisory service. And that aspect will definitely assist with talent attraction and talent retention within your firm. I think it's also a goal for your professional team. Clients participating in the use of financial commercial advisory services have significant growth opportunities, which should involve your firm offering ongoing advice, innovative activities. That could have been where someone started with research and development. It's gone a bit further and now it could really blow out. Launching of new products and services, raising capital, scaling up. Currently, you've got to turn over, your client's got to turn over 2 million and they aspire to 10 million. How are they going to get there? What are the problems? They're going to go through growth pains going through that. Is their leadership team up to it? Do they need more people? Do they need more mentoring and training? What's your role in all this? So all this is generating a new source of income for your firm. Very important. So are you interested in earning gold for your professional firm? Getting these services? If you're interested, please go to our website, www.essbiztools.com.au. Click on packages and pricing. Click on financial forecasting package. And you will be able to go through all the material. Now, this is the last day of our Black Friday promotion. And we are promoting that as part of our BizAid by ESS BizTools. We have discounted our products to try to make it easier for accountants to become subscribers, read the material, and then go out and talk to their clients, because many SMEs really need help at present. So we've factored in a 33 1/3% discount. So you can pay up front $7,043. You can make 12 monthly payments of $704. Or you can just subscribe for 3 months to see how you go, $2,070. Now, these special promotions are available until next Tuesday, the 10th of December. I hope to hear from you. So if you've got any questions about any aspect of the financial forecasting package or any other aspect of the services that ESS BizTools can supply, please send me an email, peter@essbiztools.com.au, telephone 0747 24 11118. Thank you for your support of ESS BizTools, and I look forward to hearing from you. If you want to have a Zoom meeting, we can organise that. My apologies for my voice, and got a cold today, and it's affecting me a little bit, but I hope you've been able to absorb my message to you about the importance of the delivery of advisory services to your clients, because I think it is gold. For your clients, they get new knowledge, new processes, new assistance to help them survive. For your team, because they will be undertaking interesting and challenging work. And for your professional firm, because you have a diversified group of clients who are bringing in fees, and it will change certain aspects of your business. Stay safe. Have a great day. Goodbye.